Let's get into some stocks that are on the move. Diane King Hall joins us, host of Morning Movers. One of my favorite market jokes of late, Diane, has been that if you need a safe place, look to Carvana shares.
It's true, apparently.
It's a pretty good market joke, right? It's like people,
Yes. Okay. So, to be fair, Carvana getting some love today. This over at Morgan Stanley, and Adam Jonas is leading the charge here, well-known analyst on Wall Street. He's upgrading his view on Carvana. He's upgrading it to overweight from equal weight. His new price target is $280 a share. Previously had it at $260. He looked at the recent pullback that we'd seen in the share price. He says it's a, quote, unique opportunity for investors to gain exposure to a leader in auto retail and fleet fulfillment. Okay, so there's some of the potential to, in terms of the catalyst, some of that is just the price point of where you can get in now. Prior to this, he was worried, Morgan Stanley was worried about the amount of leverage that Carvana had on its balance sheet. That's come up before. He said those worries have essentially, taken a backseat because of strong free cash flow generation, which can help address and service that corporate debt load. Now, he did highlight that Carvana is more exposed to a lower strata of auto credit than the rest of its coverage. So in other words, I guess some of the Carvana users may have a lower credit profile than the other coverage area. But he's talked about that they've demonstrated execution with regard to profitable growth and addressed, again, leverage concerns. And he called it impressive operating execution as it relates to its performance to peers in the sector. So we know that they've been able to grow their used vehicle volume. We've seen more used vehicle demand recently. So shares right now of Carvana moving higher. And I'll share a personal note. I was recently actually on the Carvana website looking. I was like, maybe I'm going to change how I buy a car myself. I am leaning
I'm
actually
my brother's
strongly.
using Carvana to sell theirs.
Yeah, I'm leaning strongly towards using Carvana next versus the traditional dealership model. And Tom was just sharing a story earlier that he sold his car on Carvana. He said it was really easy. He said it took like 10 minutes.
There you go. So, I mean, I'm kind of making a joke about it. I'm kind of not. It's just that there are still those out there who believe that this is a zero. Essentially, and it seems like all the evidence is building up more and more that like they've actually just found a sliver of the auto market right now, which is like so dead, and then found a way to have a lot of activity with people trading on their platform.
Yeah, and I mean, to your point, though, about how it's viewed, the analyst community is mixed and basically almost split down the middle, where you have about half of analysts who cover this do have it in the buy camp, and the other half are either hold or underperform. So the views on the street are very mixed when it comes to Carvana, but there is something to be said for Morgan Stanley to be changing its view on it, because they had been more cautious on Carvana, but now, again, they see this as a constructive entry point. Okay.
Well, bulls coming around to the stock more and more, it seems, as price action just, as we say, is king. When bears had their shot at 350 and couldn't put the dagger in. So, the company lives on, thrives, and defies the bears.
It does. I mean, look at its performance year to date. Even, similar to the broad market action. Exactly. I was just going to say, that. So even in the context of that, it has, really kind of had this steady climb this year. So there's something to be said about its performance this year, so far year to date, and even if you look at a one-year chart for Carvana.
True. Okay, let's talk Meta here. Interesting story from Meta, that they're going to offer an ad-free IG, or is it Insta? I don't know what kids call it these days. What's just Instagram?
So it's a little bit, so this is more about what would happen potentially in Europe. This is according to some reports that they may be offering or are testing out the idea of offering a subscription service in order to have an ad-free version of Instagram and or Facebook, okay? So this is about the clampdown that the European Union has been making with regard to its privacy rules there that would restrict its ability to, give people who are on the platform personalized ads without seeking consent, because they have to do that. We know there are just tougher privacy regulations over there, and we know that ads are a big source of revenue for Meta. So they're trying to find a way around that. So they're trying to do this plan. They're calling it SNA, subscription no ads, for European users. It gives them the ability to either access Instagram or Facebook without ads, or pay for versions of the service. The way they would charge for this, there would be, they're testing out this €10 charge, but that's just for the desktop version. I mean, who really uses these on a desktop that much? Then there would be an additional charge for the mobile version. So it could be anywhere from what would probably translate to the equivalent of $14 to $17 a month if you're, converting euros to dollars. Now, again, this is not something that has occurred yet, but apparently they're in talks with officials over in Europe about this version in order to meet those privacy rules.
Okay, so this is because of this is all a way to accommodate privacy rules to some extent, right? So this doesn't necessarily mean it's going to happen here.
Yeah, it doesn't mean it's going to happen here, but I think what would be interesting to see is if they do, if they find that it is a significant revenue driver, it could be, I could see them testing something like that, for instance, in the U.S., because one of the things that's happened is when you see some kind of pattern on Meta and they haven't quite figured out how to monetize it, they will figure out a way to monetize it. Because, for instance, when Reels first took off, I remember them talking at earnings calls about that and how sticky they were for users, but they literally said on the call that they hadn't figured out how to monetize it. They have now. They figured out how to incorporate ads into that. So in other words, if this turns out to be a significant revenue driver, you could see them testing that here in addition to the ad version, right? Because obviously the ads are a cash cow, right?
Right.
But if there is the potential, and if there is a potential pullback, exactly. If there's a potential pullback in ads, then why not go to the well for something else?
Fair enough.
And people are just used to subscriptions nowadays, so you could see that working here as well. Even though, again, this is for Europe that they're testing this out, and more because of the privacy and data controls that they have to address.
UK there. Specifically, because they've already got some of this in the EU. All right. I mean, I don't know. Sounds like a lot of money for Instagram. All right, Diane, last one. Cloudflare double upgrade. Hit me real quick.
Yep, double upgrade over at Cloudflare. Shares moving higher off of the back of this move from Bank of America. They're upgrading it to buy from underperform. Their new price target is $160 a share. That's up from, they previously had a target of $60 a share for Cloudflare. They see two key catalysts here: the differentiated approach to AI and their momentum in network security, in particular secure access service edge. They also see their AI as a service being able to become the preferred method of AI consumption for enterprises. So they see them becoming a leader in that space.
Okay, there you go. Seems like pretty bullish arguments.
Yeah.
And these stocks have been very, very resilient. It also seems like just security is, never-ending demand.
Exactly.
Yeah, never-ending demand. All right, thanks, Dan. Appreciate it very much.
All right, you got it.
Big winner this morning, Cloudflare with the double upgrade. Thanks, Diane King Hall.